Um, we're doing a video today to explain the investment opportunity for Total Horizontal Partners 24-25. This is what I'm going to call our mid-offering update. This is the program that we originally sponsored latter part of last year, had an initial closing, and now we're in the second stage of the offering. 4 people have joined me today to make this presentation. Got longtime friend and associate David Hall here. David is a professional, real estate professional, has been virtually his entire business career. And as I mentioned, we go back over 50, 60 years at this point. More recently, David has been a partner with us in both real estate and in oil and gas. And he's here today to join us in our open discussion. Also, we have Clint Privet, who is my partner and a landman in our Total Horizontal Partners program. Clint, as you know, is an attorney and has a good background in land, and he's the one that's been assisting us in inquiring the leasehold for our participations in the investment program. And lastly, we have Jimmy Hunt. Jimmy's our intern, has been last year, this year, and probably will be for some point till he graduates, but he is OSU on scholarship, and he's got a double major, business administration, double master's degree program in data science and business analytics. So Jimmy's going to be an addition to us as we go forward. Let's talk about first the total unique opportunity that we have in this investment. Number one, we purchase working interest in each prospect at cost, heads up, by virtue of the leasehold that we are able to acquire with Clint's help. We have a number of different leasehold brokers and people we deal with, and we have a very sophisticated software program that Clint's going to demo for you today that will talk about how we can analyze and look at these opportunities by studying wells that have been drilled in the nearby area with access to their production profiles, target formations, and so forth. Anyway, this brings to the point that with the fund concept, we're able to provide investment diversification across multiple operators, prospects, resource plays, wells, targeted formations, identification and completion techniques. At this point, we have participations in the 24-25 fund in 10 different wells with 7 different operators. And we're going to be able to go through all of those today to explain where we are on each one of those. Investing in the fund provides the investor an affordable and cost-effective direct participation method in the exploration for oil. Where else can a passive investor invest in a multiple of wells with this ease and convenience? We dollar cost average. Everybody's investment goes in on the same basis, and you will have an interest in all of the wells, regardless of when you invest. The people that invest in 24 before year end, they receive the IDC related to the wells that we prepaid. The investors that invest now in 25 will get the IDC on the wells that are drilled and completed this year, which will be less because we have income now. But everybody will participate on the same pro rata share in the income that's generated. We're going to close the second stage of the offering on the 15th of September, and we'll start making cash distributions at that time. Bottom line, though, this method of investment provides partners with risk management, working interest management, accounting, reporting, and revenue distribution. We pride ourselves on all of that, and annual tax preparation. So that's a brief overview of what the structure of the investment offers to our investors. So, Clint, let's pull up the next the Anadarko Basin. There we go. All right. All of our participations in this program are located in western Oklahoma in an area surrounding and in the middle of the Anadarko Basin. As you can see over here, this is a geological map that we pulled that shows the Anadarko Basin, how it spreads across Oklahoma, Texas Panhandle, and you can see how. And Clint, why don't you take a minute to explain what this map is here and how it relates to the...
Sure. So, as you can see, it's color-coded by depth of the basin. As you go south, the basin gets thicker in meters, up to 5,500 to 6,000 meters deep. And you can see on this map, the applications and orders issued by the Oklahoma Corporation Commission, the governing body over oil and gas production in Oklahoma, mirrors the Anadarko Basin. So in Oklahoma, this is the primary current exploration area.
And all of these are wells that have been proposed that are in process since 1/1 of 24.
Correct.
So this is a year and 5 months of activity, but it definitely shows the trend of where the activity is.
Correct.
Okay. Let's show them the production map now and how that lines up.
These are wells completed since January 1, 2024. You can also see the current rig locations of every rig in Oklahoma is within the Anadarko Basin.
While we're talking about the Anadarko Basin, I asked Jimmy, our intern, if he would study the geological formation and how it came about. And Jimmy, if you would, tell us a little bit about what you learned on the Anadarko.
Yeah, so about 300 million years ago, tectonic plates shifted and collided, and they formed the Amarillo Uplift and the Wichita Mountains. At the same time that they were forming, the nearby land sunk deeper due to the pressure. Soon after they sunk, due to erosion and more shifting, a lot of the material from the side of the mountain sort of ran off into this basin and filled it up with layers of sediment and organic material. And over time, the weight kept adding to it, and the heat and the pressure increased, which caused that organic material to turn into oil and gas. And
fossil fuels.
Yeah.
Right.
It really made this area prolific for what we need to do.
I remember quoting one of our operators from years ago that was explaining to me the same thing, Jimmy, that you just explained. And there were mountains here, the Wichita Mountain Range, which were among the tallest mountains globally at that time.
Yep.
So we had like Mount Everest in our backyard, and somehow it collapsed into what is now the Anadarko Basin. So anyway, the point of the story is that our participations are right here in our own backyard, western Oklahoma, and we are fortunate to have access to what is truly one of the most prolific oil and gas exploration plays going on in North America today.
Correct.
Okay. So, Clint, I'm going to let you take it from there on these maps. And let's maybe start explaining what some of our individual prospects are and explain the way that we identify them in respect to offsetting production, things like that.
Sure.
I think you've got some slides for that.
So, again, we have Ellis, Roger Mills, Major, Dewey, and Custer County are where most of our interests currently are.
We have two, if I'm not mistaken, we have 2 or 3 wells here.
Yes, 2 wells in Ellis County.
We have
1 in Roger Mills.
right. We have 1 in Major.
Yes.
We have our Roadrunner up in Alfalfa.
Correct.
Go ahead and use the well names on these so that people can reference those on the working interest portfolio. Yeah.
So the Mewborn, Pershing, and Lazy M are located essentially here in this portion of
And in this area right through here, there's multiple target formations. Most recently, the hot play out here has been in what they call the Cherokee Shale.
Correct.
But another part that's related to it, it's a different strata, is the Red Fork.
Correct.
And some of these Red Fork wells are phenomenal, but we're in several wells of both of those.
Correct.
Okay.
Yeah.
So don't let me interrupt.
Oh,
you
you're
again.
fine.
Okay.
And there's a lot of history of different formations: Marmaton, Cleveland, Osage, numerous other formations in here. This again is filtered down to the last year and a half of activity of wells being brought on. But we have an interest down here in a continental well as well. This is kind of our outlier area, and they're drilling Simpson formation down here. Another classic Oklahoma formation.
And all of these, which we've discussed, not in this particular meeting, but everything we're doing now is in a multi-unit lateral well, a minimum of 2 miles to 3 miles, running through 2 or 3 sections, and some of these are at pretty substantial depths. And as most of you may know, the deeper you go, the higher the pressure, and typically the better the reserves. And the guys that are doing this out here that we're participating with are the biggest players in Oklahoma, and some of the biggest players in the country. You got Harold Ham with Continental, Newborn, which I don't know the principals there, but these guys are the 800-pound gorilla up here in the Cherokee play. And then you've got guys like our most recent one, the Tom Ward, very respected oil man. He was Aubrey McClinton's partner in Chesapeake, and he's gone on with 2 or 3 major oil plays, and now his Mach Energy is doing a 2-mile lateral in the Red Fork.
Correct.
And we've got a nice piece of that one. So,
and another Red Fork well that we can just transition into this is the newest acquisition that was originally featured in our offering memorandum under
Right.
Tokeland Oil and Gas. They've sold that interest to a group here in Tulsa, Anthem Energy Partners, and they're now pushing this program forward to drill 2 2-mile Red Fork wells that are offsetting. Each of these other 2-mile wells are Mewbourne producers. I have highlighted here the production for the most closely related horizontal well is the Barrick 3625 that produces from the Red Fork and has produced for 16 months and made over 250,000 barrels of oil and 1.5 BCF billion cubic.
These are phenomenal numbers for people that have been with us in previous programs. To have a well that produces this kind of production, it's got an estimated ultimate recoveries of almost 1.2 million barrels of oil and 11.6 BCF of gas.
That's a tremendous well.
It's phenomenal.
Yes.
It's phenomenal. And when we have participation directly offsetting this well in 2 wells, and we just found out about this. This is kind of the 2-for-1 special.
That's it.
That we put out in our last report. We realized that they were not going to drill one well and then wait and drill another. They're going to drill these back to back and do a zipper frac.
Yep.
In fact, let Jimmy tell us what a zipper frac is, because he knows.
Yeah, so basically, instead of taking one well and the other and fracking the first well, all stages first, and then going to the next one and doing all of the stages, you bounce back and forth. So you'll do stage 1 of well A, stage 1 of well B, stage 2, and then so on. And so you're zipping back and forth. Yep.
The zipper frac. So anyway, we were really excited to hear that, because what that does is it essentially reduces our cost of acquisition, because the leasehold we paid for, which is kind of in the same neighbor, I'm trying to remember, what did we pay? Oh, we've got it right here. What did we pay for our leasehold on that?
That was $27.50 an acre.
$27.50 an acre, and we had assumed one well. Now we're getting 2 wells for the same leasehold cost. Thus, we have a 2-for-1. So that acreage knocks it down to what, $1,200, $1,300 an acre.
It's also advantageous on drilling and completing costs, because they'll drill it from the same pad, and so they'll only have one rig out there for the continuous drilling program. They don't have to move in, rig in and out new.
So we'll have cost efficiencies there, which will reduce the overall cost. Let's take a minute and show them what Anthem has put out for their investor presentation, because this is really interesting. I'm going to let Clint explain this, but we had been solicited for participation from Anthem because they knew we were looking at this deal. They knew we were talking to the guys at Tokeland. And we did not sign an NDA. We did not take their information, but we've been on their mailing list. And this is what they're showing to their investment partners. And to compare this to what we're doing, this is a highly promoted deal. I talked to them on the phone briefly and asked them what their deal structure was, and they're going to end up giving a preferential return and a cash back, and they're coming in for something like a 50% back end of the upside. And they believe this thing right here. Where does it say it? They believe that it was in the email they sent, that this is going to be a potential of a 6-month or less payout.
Yeah.
Now, again, that's yet to be seen. That depends on energy prices. But go ahead, Clint, tell them a little bit about what this slide represents.
This slide represents essentially a promoted deal on the same as this slide. So here's our unit. That's the Anthem drilled unit in this slide, and the offsetting wells represented. And you can see that they have essentially highlighted the same things that we did. This is the Barrick well that they have highlighted as 2 million barrels of oil equivalent. So that takes into account, it puts a number on oil as well as
it includes the gas with it.
Yes.
So what is a really 1.2 million of oil and 11.6 BCF they represent as a 2 million barrel of oil equivalent.
Correct.
Estimated ultimate recovery.
Correct.
That's what, and that's the ones we just looked at, and here's the 2 well proposal.
Correct. And this well is the Haggard well that is directly to the south, one section neighboring to the south that initially produced over 3,000 barrels of oil equivalent per day. So when it came online.
And that's what that stands for. Barrels of oil equivalent daily, initial production, December of 24. So
Correct.
This is it's a pretty current.
Correct.
Pretty current comp.
And again, it is advantageous to us to own the leasehold outright because it gives us rights for any other future development in the unit, and it's not a wellbore specific assignment.
That is really great news. We're fortunate to have been able to acquire that. We didn't even know they were going to do the 2 wells when we bought into this deal, but we
Correct.
just knew what it was. So pretty exciting.
Absolutely, it is.
And another thing, they're preparing the pad site to drill right now. They're going to spud these wells. The first well will be spud this month.
Correct. They have conductor and surface hole drilled and cemented. So they're moving a rig on site, and as seen here, their first production is expected by November.
So it's an exciting prospect.
Yeah.
But every one of these that we're in our program has similar potential economics.
Yes.
So that's the reason that a lot of people have come to us. Your dad in particular said this is the best thing we've ever done.
It is a very exciting program to especially be seeing firsthand.
The ability to participate at cost with major operators with no markup and with no operator carry makes this an immensely fair deal for the partners.
Yeah.
So anyway,
Can I ask a question?
Absolutely.
Your positions in these wells are initiated through the acquisition of the leasehold interest.
Correct.
And you've acquired that over the last couple of years?
When we acquired this, when was it, a month ago?
Yes, this one.
This
was less than a
particular
month ago.
one?
Yes.
But all of these in this program?
Since October?
Yeah, all
Since
of these.
last October?
Yes.
You've acquired these with the intent of putting this package together?
Correct.
And I got you. Okay.
And the reason, explain to him, Clint, why most people have asked the question. They go, well, what's Harold Hamm need your money for? Harold Hamm is the richest guy in the state. Last time I saw you, I think he's worth $18 billion. He's not calling me for money, I can tell you that. And he doesn't want us in his deal either. But the point is, explain to them what's going on with the how we're able to acquire this acreage.
Sure. I've come from a land background. I've spent years in courthouses out in this part of the state, taking leases, running title. One of the more friendly terms that someone had called us recently was snakes. We're snaking the deal because
being in the real estate business, I can understand that. You bet.
So these on this instance, this company owns 608 acres of the 1,240
12, yeah.
in this unit. So other non-op people own that other acreage, but they're able to have a controlling majority interest. So they're going to be the designated operators. And so there are opportunities for groups like us to come in and buy between 1 and 500 acres, potentially 400 acres, and be in that and use essentially the operator's science. Mewbourne has all the geology, all of the data, all of the science that they've gathered both through their drilling programs and any seismic that they've bought and any other logs that they're using. And having the background of working with brokers for so long, I've developed relationships with a few of them who are have guys out in the courthouses, have guys negotiating with mineral owners to buy these leases. And we do pay a small markup, sure, and sometimes an override of a point or two to get the opportunity to buy those leases.
This is created by law in Oklahoma, the Oklahoma Corporation Commission, and there's statutes that mineral owners and those people that lease the mineral rights from mineral owners have the option to participate in those minerals, the development of those minerals, by law. So it's not like, they can say no.
Harold Ham can't say,
No.
go away, don't bother me.
No, can't do that.
He has to do it
He
by
has to.
law in Oklahoma. Okay.
So that's the reason that we're able to buy in under these. And these guys, of course, they're not excited about it, but it's the law, and typically they never get 100% of the minerals because the minerals are fragmented and over generations. And so there are a ton of guys, like the Van Horns, for instance, people that we're doing our total production partners with. Those guys are professional landmen. They do the same thing. In fact, we bought our most recent prospect for them, Tom Wardswell with Mock, came from them, and we got a heck of a deal on it. $800 an acre versus we've been paying $1,700, $1,800, as much as $3,000 an acre, and we got a higher NRI too. So the closer you are to the guys that get in there and get that acreage early on, the better the terms are. So
Gotcha.
So
Okay.
Correct.
Super.
okay.
Thank you. I know that threw you off a little bit.
No, that's the reason you're here, is to ask questions.
Well, I'll ask some more.
Okay. All right. Okay, what else do we want to say about this, Clint?
I think we've pretty well covered this unit. It is an exciting unit.
And again, to reiterate, this is the Red Fork, and the Red Fork is actually a pin sand. We've been in some Red Fork wells back here. The stuff here in eastern Oklahoma is much shallower. If you look at a geological graph of how the geology lays out, it's western Oklahoma. It gets much deeper, so the reserves are better. But we've done Red Fork wells. Red Fork's a big play over here in eastern Oklahoma, where we've done a lot of our stuff.
Yeah, much shallower though.
Okay.
And then we have our working interest portfolio.
So here's our working interest portfolio, and we're going to send out, by the way, we are updating these literally on a weekly basis, sometimes daily, with new additions and with updates. Now we have added most recently, and this is to demonstrate the diversification, which is one of the most important investment characteristics that we offer. This percentage of the portfolio right here represents the amount of our capital. Now, this is keying off a projected total capital in this program of $2.5 million. Right now, we have roughly $1 million subscribed or committed for. Actually, an additional $200,000 is now committed for a later investment. Total commitments to date total $1,148,000. That includes the AFE, which is the estimated drilling and completion cost for these wells based on the budgets. It includes our leasehold cost right here. And so these are the total. These are the wells that we prepaid that in fact, we have, 2 of these in production now?
Yes.
Roadrunner, actually 3 of them in production now. And some of these are, give a brief summary of where we are on the production profile on these wells.
The Roadrunner has been producing since September and holds steady at around 200 barrels a day.
It's a little over 200 barrels a day. We have returned, or it has returned, we have collected income into our partnership here, the Total Horizontal Partners, of over $50,000 to date, which based on our investment, this our total investment here is less than $100,000. We've already gotten a 50% ROI on that investment, and that is part of the money that will be held in escrow in our partnership account and will be included in our initial cash distribution in September.
Correct.
And those additional wells that are producing now, as we collect income, they will likewise go into that account and be held for pro rata distribution to everyone that invested both last year and this year.
Correct.
Okay. So anyway, talk about the Carpenter and the Lazy. And
the Carpenter well is a Mewbourne Oil Company well in the Red Fork in Roger Mills County. It has been producing for around 20 days, and they've got the choke about half open on it. So it's still really pressured up. This is a deep Red Fork well, and when it came online, it was at over 5,000 PSI.
Strong. That's heavy.
And it's producing, well, it IP'd yesterday, high gas IP at 5,000 MCF and about 600 plus barrels of oil yesterday.
It was 688, wasn't it?
Yeah,
I think that was the number.
That.
So, and that's at very early stage. We haven't really seen what this thing's going to do yet.
Correct.
Okay, where are we on the the Lazy M?
The Lazy M has been producing since April 22nd and continues to do 500 plus barrels a day. The oil cut is pretty incredible with the Lazy M. It's about a 50% oil cut.
That is strong, very strong.
And it's producing from the Cherokee Shale, so it does have less water associated with it, and it's still over 2,000 psi right now, I believe.
Okay,
it's still flowing back.
Okay. Anyway, back to what I was talking about a moment ago. The percentage of the portfolio, each one of these represents the amount of our total investment into what we're going to say now our anticipated capital structure of $2.5 million. We could raise more than that. We could end up raising less than that, but that's what these numbers are pegged at. What this reflects is we don't have any one well that is going to represent more than 10% of our portfolio. So even if you have an issue with a well, and probably the biggest risk in these wells is a mechanical risk. The geologic risk is mitigated substantially by the fact that these are developing proven to a large degree resource plays, and as long as you can drill and complete them successfully, you know you're going to make economic wells that are going to produce a lot of oil and gas. So anyway, that demonstrates the diversification that we have in the portfolio, which is another major investment consideration for people, and it's a much more conservative, as we found out in many of our programs where we've had a large percentage in one well. You have a problem with that one well, then your investment results for the program are less than what you'd hope for.
Absolutely.
Sometimes that's an understatement. So anyway, okay. What else do we have to pull up here and talk about on our program? Any other questions here, guys? Weigh in. Anybody?
Your goal right now, you're at you've raised
We've raised a little over $1 million.
$1
This
million,
is
$150?
our commitment. We haven't raised this. We've raised right at $1 million right now. Or no, excuse me. I think we're about $1,120,000, I believe. Anyway, we're
close.
almost balanced with what now. Understand, some of these that have the payment status. This is another thing. Wealth of information here in this working interest portfolio, and we update this. The ones that say paid in full are fully funded. All of these have been funded with respect to the leasehold. But the drilling and completion costs on some of these haven't been funded yet because they haven't started drilling. And the nice thing is, under most of these, we have an agreement in place, what's called a PPL agreement, that allows us to pay for it when the drilling commences, rather than having to pay for it up front. So that's the reason we can make commitments, buy the leasehold, get in line, and then get our portfolio filled up, and then fund them as they are drilled and completed. These are the estimated. This is the total development cost for each of these wells. These are the unit size of the acreage. This is our net revenue interest over here on the left. That's how much percentage that we participate in as a working interest participant, and then that's our acreage position over here on the left column. So once you understand what all of these columns are, this is the well name for each of the well. This is the formation. Now, some of these are not entirely accurate because they don't want you to know what they're doing, so they'll put the Des Moines series, or they'll say Cherokee, and in some cases the Cherokee has several different levels. And a lot of times operators don't want to disclose this information because they're trying to restrain, they're looking out for competition. But then in the last column, we have the status on each one of these wells. And then in the column there, and these are things we've added just recently in the last week. We put notes, current notes on it. And let's talk about the Devon well, the Mallard.
So the Mallard well is a well that was keyed on in central western Custer County. It was kind of a wildcat proving well. And there were a lot of people that had waited on the initial production results to be made public. And it's 4 miles directly east of our proposed marbled 3031, and it's made 150,000 barrels and half of a BCF in 10 months.
Which are good numbers.
Yeah.
Which are good numbers. Yeah.
And also, this is another interesting well that could spawn a second unit well, because Devon has applied.
This
There's
is
no order.
This is another potential 2-for-1.
Yes, they've
Wow.
applied for it. There's not an order issued yet, but they have applied for their increased density, which would add a second unit well.
Which means we can include this in our portfolio. We've already paid for the acreage, so we're getting a bigger bang for the buck.
Potentially, yes.
Okay.
Since we're using that well now, trying to understand the whole thing, if you can slide back, what if that makes? What's the royalty interest? It seemed like it was high, 70. So what does the 74% mean?
That is, it says royalty /NRI. Actually, that figure is our net revenue interest, which means every dollar that oil and gas dollar of revenue that's received, we, for our proportionate share, will get, in that case, 74.125 cents.
So that's actually a little low than.
That's the lowest NRI we have. Typically, we're wanting 75% or more.
Correct.
Which again, you start looking at these, and we're getting better NRIs on some of these, but 78.
Okay.
So that's what that stands for.
Okay. So on your allotted share, the owner still is spending money and time and all that stuff, so they get that. But because of the leasehold interest that you controlled, you get 74% of the revenue off of.
We get the
allocation.
revenue, then we pay the operating expenses. The owner of the minerals gets a royalty interest, which they do not have to pay for any operating expenses. So that's the reason minerals are so much more expensive. And people that have minerals, the way that we get them is we lease them. which is how most operators get them. There's nobody else.
Okay.
People
Yeah.
were fortunate to have family that owned some of these people, like in the Permian, family owned thousands of acres, and they're set for life. An understatement.
Yeah. Gotcha.
But anyway, this is how the game's played. But that's what that
Okay.
column stands for. And I'm glad you're asking these questions so we can go back, because I know when our partners get something like this, it can be a little intimidating. And the more wells and the more columns we put on here, the more intimidating it gets.
Absolutely.
But for people that really understand what we're doing, all of this is very, very pertinent information. And the stuff that we're doing over here is we're adding the latest information that we're getting. Clint, go through a couple, three of these and explain what they mean.
Sure. So obviously the Carpenter Lazy M we talked about are both producing. This Bonds 1-10-3-4 is actually a 3-section unit that Continental's putting together, where they're going to drill. The target formation is the Simpson, but the Arbuckle and the Viola sit adjacent, top and bottom of it. And so in case they cross into that formation during the drilling of the horizontal, they want to be able to capture that and not be sued for trespass.
Okay.
And they have just gotten their multi-unit order approved, and they're waiting on a permit, which should come soon, because they have to go back and work with the Corporation Commission on allocation of those 3 sections, what percentage of production will be allocated to each by November. So this well should be drilled and finalized between now and November.
Yeah, I mean, but by law it has to,
Right.
in terms of the orders. So anyway, that's the reason we haven't funded that yet. But we're at a direct offset to a well that's made 81,000 barrels in 6 months
Correct.
and 43,000 MCF. So another good production profile.
And we'll touch on a little bit of negative here. As we talked about earlier, diversification helps us mitigate foul ups. And this is a well drilled by Duncan Oil Properties that was fouled up. They drilled the entire 10,000-foot lateral and lost the wellbore completely at the turn.
That's a mechanical problem, and those things happen. This is the reason why diversification pays off. Now, we do believe, because we're kind of treading on new legal ground here, because these multi-unit laterals create situations. The acreage that we bought into is in the second unit,
Correct.
which they apparently are going to be able to salvage the first mile of the lateral. They re-drilled it, but again collapsed on the second round. So we paid for our drilling and completion in that first mile, but we're not included in the ownership and the net revenue, because our minerals that we leased are in the second section. So we've consulted several attorneys, and we're looking at, we believe there is a possibility, because of that, since we got no value and yet we paid for the well that is going to produce, that we could get a refund, possibly for all of our drilling and completion dollars.
That's the goal.
So that
for
is
sure.
the goal. So that's the but that of all the wells that we have, that represents less than 4% of our total portfolio, projected portfolio, and we believe there is a way to collect at least some of our capital investment in respect to that. So,
Correct.
all right.
And these others, the Pershing is a well that directly offsets the Lazy M in Ellis. It's drilled now, waiting on completion.
It's what's called a DUC, drilled, and waiting on completion. Talk about the offset.
Offset has been producing, all of these wells up here have been producing for less than 2 years. It's a really new program that Mewbourne moved in and is proving up the play. And they're doing a great job of it. The offset's made 106,000 barrels and half a BCF in its first year and a month. And the EURs via Enverus, that program that we were looking at earlier, 4.1 BCF and a little less than 300,000 barrels of oil. Again, it's an algorithm-based estimate.
Yeah,
So
these are
take it with a
coming
grain of
off
salt.
the drilling info,
Correct.
Which is not actually engineered reserves by a professional engineer. it's built on an algorithm in the program. So these are, you might say they may be close, but they could be high, they could be low. But it gives us a reference point, and at least we have a data source that we can refer to.
Correct. And then our next two are the 2-for-1 deal. So our leasehold cost acquisition for the second well is actually $0. And these have essentially operations have commenced. There's not a drilling rig on site that can complete the well yet, but they are moving it in, if not already, any day.
Yeah, this is the big one we talked about early on, where we're offsetting a well with 1.2 million barrels of oil, estimated ultimate recoveries, and 11.6 BCF. If we can make a well that's even half that, or 2 wells in our case, we're talking about a huge home run.
Yes, absolutely.
I mean, they're quoting 6-month payout, Anthem is, and with some kind of phenomenal overall rate of return, and that's after they haircut their partners 50%.
Right.
No haircuts with us.
So this is the one we had the other slide on. This is the one that we're off.
Yeah.
Yes.
We're involved in that one.
Yeah.
Okay. All
This,
right.
these 2 wells.
Yeah. There you go.
And here's the monster next door, and here's another monster. And you can see in its second month of production, it averaged over 1,000 barrels a day.
Holy cow.
Yeah, and these are, I believe, these are free flowing.
Yes.
These are not on a lift. They're not on a pump. They're not on nothing. These are free flowing wells.
And if it's similar to the pressures of the Carpenter well, which is another Red Fork that we're in, they're looking at 5,000 psi at initial production. And here's another well directly to the south that's averaged over 900 barrels a day in its first 4 months. It's made 100,000 barrels and almost 1 BCF in 4 months.
In 4 months. Yeah, and look at this. Again, the Red Fork. That's the reason why we have been keying on these Red Fork wells as much as we can. But then again, they don't even tell you what they are. They say Cherokee Series, and you go, well, maybe it's a Red Fork.
It's kind of
Anyway, interesting
Offset
game
to
we
that
play.
one. The offset to that well in the same 2 sections has an estimated recovery of almost 14 billion cubic feet of gas.
Wow. That's just monster gas wells.
Yeah.
And something else, talking about market conditions, one of the reasons that I think things have been slow with respect to the investment offering is a lot of people are not real enthused about the price of oil and the price of gas. They've been languishing, they've been down, they've been sideways for a long time. I have sent out some recent research to a lot of our partners. I think you've been on that list. There is ample reason for optimism about energy prices, both oil and gas, going up in the future for the very reasons that they've been suppressed so long. It's suppressing production. A lot of these wells are not going to get the capex budgets of these companies. This is on a global scale. Is being reduced substantially. I mean, I read the reports on these companies, and I'm involved in several of them with common stock ownership. They're cutting their capex. In other words, in this H5 research that I send out, these guys believe that we've already seen peak oil in terms of production in North America. That we've surpassed, and now if demand continues to expand in the future, oil could be the new game in town. I mean, we're talking a year from now, 2 years from now. Well, it'd be real nice to own all this production when that happens. So, anyway, oil and gas prices are volatile, and nobody can actually predict them. But the best cure for low oil prices is low oil prices, and that's what we're seeing right now. Okay, is there anything that we had for a slide, Clint, that we haven't gone through
I
yet?
think that's it.
Okay. Any other questions, Dave?
No, I think it sounds like a really intriguing program, and I need to go back and read more of the reports that you and Clint have sent out.
Well, we're going to
Jimmy, I guess, had a hand in them.
We're going to be sending out this report with our updated production numbers, with our updated working interest portfolio. We're going to send out the investment strategy, which we could have put up and talked about, but I didn't want to read through 3 paragraphs. All of that will be included with the video, and we're going to do that here in just probably the next 3 or 4 days. Okay.
Thanks.
Those.
Thanks for
Thank
taking
you.
the time.
Thank you for taking your time, Jimmy, Clint, John, for your help, and everybody for watching today. This is Total Horizontal Partners 2425. We look forward to hearing from you. Thank you.
Absolutely.
Okay.
Good job, guys.
Thanks for
Good
done.
job. Thank you.